Let's get right to our weekly market monitor. Last time he was on in March, he recommended Apple. It's up 1.5%. McDonald's, though, off 1%. His third pick, Citigroup, up 6%. He's Mark Luschini, Chief Investment Strategist at Janney Montgomery. Mark, welcome back. Good to have you here. Before we get to a pick that's still on your list, let me ask you about McDonald's. Are you still comfortable holding it?
We are, Tyler. We bought it for the 3.5% dividend yield it offered at purchase price, and the fact that the new CEO still has plenty of runway to be able to turn around the iconic franchise that we know has great brand value but needs a couple of fixes. So as a consequence, we're still long.
And you liked Citi the last time. You must love it now. It's up. You're sticking with it.
Absolutely. The money center banks are cheap from a valuation perspective, but yet haven't fully been monetized, even as earnings growth has started to track fairly robustly within the space in the aggregate. Citigroup particularly is the cheapest among those universal banks, and we like its long-term prospects.
You also like Gilead. Why?
Well, the healthcare space is one that's done very well over the last several years, has a demographic tailwind, of course. Gilead is a biotech company trading at 10 times forward earnings versus an industry that's trading at about a 50 multiple, and the S&P 500 more than 40% higher than that. So it's cheap on a valuation basis, good growth prospects, and its hepatitis C treatment is considered to be the best in the industry.
Let's turn to your third pick, which is an ETF, iShares Home Construction, the ticker there, ITB. I'm curious why you like this one on a day when interest rates are moving up. We've got mortgage rates moving up. That's usually not great for homes and home builders.
Well, Tyler, like a previous guest had alluded to, it may actually entice some buyers off the sidelines for fear that they're going to miss the opportunity. But that said, it's the first time in actually quite a few years we're starting to actually see household formation grow at a pace faster than housing starts. And so to the extent that may draw demand into the home builders market, we think it's undersupplied, and therefore ought to be good for home builders' prospects to continue to put new homes out into the marketplace to be bought.
Obviously, you like those three stocks that you gave us, but overall, when you look at the market, a lot of people think that valuations are a bit stretched. Would you agree with that or not?
That's not unfair, Sue. We think valuations are full, and that's why if you're going to be long in the equity market at the moment, I think you need to try to find spots where there's great value, or at least you have some valuation support. And those sectors that I mentioned, consumer discretionary, subsets of it, financials, and of course healthcare, we think represent that.
Mark, thank you very much. Have a great weekend, sir.
Thanks, Tyler. You too.
Mark Luschini with Janney Montgomery.